Good morning, friends. Today I'm going to show you one of the top mid cap, or maybe you can say IT company, not mid cap but small cap, which is having very good future, you can say, prospect of growing the overall business. So let me show you some insight about this company, which you can see on the screen. The Allsec Technologies Ltd. Company incorporated 1998, and Allsec Tech is the global leader in outsourcing solution, offering the future-ready, resilient business transformation services to the industry's heavyweight Fortune 500 and growth-focused organization. The service provided by the company included the data verification, processing of the order received through the telephone calls, telemarketing, monitoring quality calls, other call centers, customer service, HR, payroll processing. Company has delivered a center at Chennai, Bangalore, and NCR with 4,000 FTE spread across the 5 contact centers in the US, Philippines, and India. The company manages over 1 million customer contact per day via multiple touch points. So these are some fundamental and information about this company. Let's see the website of the company, how the company is working there. So this is the website of the company, Allsec Technology. You can see the celebrating 20 years for this company. Okay. Now you can see about the overall 2 million reason, okay, to choose Allsec CX management services. So these are the different business companies providing credit risk management, customer services, mortgage services. So some financial, some HR related activities. So a lot of things companies having in the overall IT related stuff. Let's see more fundamental of this company here. Market cap is just 786, and current price is 516. High price 749, low price is 404, and stock P is just 13. So you don't see this kind of low P in IT industries right now, but overall this P is very low, which is showing a very good and probability in the future. Stock P 13, book value 137, dividend is 8. Oh my god, dividend is 8.73. You don't see this much kind of dividend. Is the annual return, maybe you can say the Nifty is giving 15%, but this company is giving just 8.73% annually as a dividend. Return on capital employed 22%, return on equity 14%, face value 10. Pay ratio negative 1.29, means the full probability of increasing their price in the coming months. Anyway, the quarterly result was going to become good. Equity capital just 15 crore, low equity capital at all. Current ratio 3.16, the overall asset is greater than liabilities almost 3.16 times. Price to book value 3.75, growth factor 6. Growth factor 6 is a very good sign here. Piotrowski 5, return on asset is 14, return on asset 14.7%, debt to profit just 1.2, means company is having some debt which is returning very fast. Altman score, everything, whenever you see the Altman score greater than 4 is a good sign for the company. Difference in IV is positive, which is also saying the company is trailing below their intrinsic value. Number of share 1.52, number of share 10 year back 1.52, solid check is 1. What a fundamental, very great fundamental. EPS for quarter is 8.92, EPS for the year 37.6, sales of 10 year 5.65, profit of 10 year 15.6. Now these are the very key values. So you can see the overall training of this particular company. This company is showing very high fluctuation in overall earnings and movement of the price. But always check with your advisor before investment in this current company. Okay. Now what are the pros? Okay. The pros are nothing but cons are the company has delivered the poor sales of 0.6%. Companies are having the same kind of business like Data Alexi, Emphasis, L&T Technology, Persistent, Coforge. Okay. And one of the positive sign that every IT company mostly, except if you like Coforge and Emphasis, all other are reducing their reducing their holding, but Allsec is increasing their holding by 7.04%. Very good sign. And here you can see the sales of the company. Okay, you can see that the company sales is growing from 72 crore to now 88 crore. Year-on-year growth is also increasing in last 2020. In 2020 there was some slightly a dip in the overall growth, but now you can see a 23% growth again. Expenses are managed very well, and you can see the operating margin 27 to 25% is very good sign. Companies having 28 to 26% margin. Interest is very negligible. Okay, profit before tax is also improving very well, 15 crore to 17 crore now. Net profit is also increasing 12 crore. 12 crore profit now showing is 14 crore profit. Okay, one of the now let's see the annual growth in the overall profit and loss. You will see the consolidated figure here. So March 2021, the sales was 159, but now sales is 334. There is exponential growth in the sales. And similarly, the operating margin was earlier 10%, 11%, now it's increased to 25%. Excellent growth in the operating margin. Interest is also very low now. The company, against their particular profit, against their particular expenses, sales, the company has very low interest. It is showing very solid performance. Net profit is also increasing from 31 crore to 57 crore. Now you can see our compounded sales growth for the 5 years, 0. Compounded profit growth is negative. Compounded CAGR for 7%. And return on equity for the 5 years 17%. Excellent growth. One of the positive signs, every investor like it, loves it. What is this? The equity capital. Company never change their equity capital like TCS, Infosys are changing their equity capital, but this company is not changing their equity capital. Reserves. Reserve was decreasing since 2024 till 2024. After that, what a U-turn. March 2015, the reserve was 46, then 76, then 203 in 2019, and 22 194. So company is basically having some kind of challenge with the reserve, changing their reserves, maybe the distribution of the dividend or something else. But I think there is something, companies have a growth prospect. Borrowing also, company has increased some borrowing in this year. Okay, investment, company have 47 crore investment. There is some reduction in the investment. If you check the asset, why? The trade receivable 57 crore. Cash equal 82 crore cash. Earlier it was 150 crore cash. Loan in advance 28 crore loan in advance. What a good company here. Company maintaining very good cash flow here. I can see that. Debtor days, you can see it's flat. Cash conversion flat, working capital flat, overall return capital employed 22%. And this company had maintained return on capital of 50%, 33%, 25%. There is risk, or maybe there is some kind of positive sign the company may maintain the return on capital 30 to 40% coming year. Promoter holding. Promoter holding was in 2020 June. Holding was 78.39. Now company reduced their promoter holding as per NSE guideline to 74% now. So now the promoter holding 73.39, consistent since March 2021. Public holding is also intact here, not changing at all. And here there are some attraction by the DII and FII in this company. Okay, very good sign. Now you can see all these kind of latest information and update. Always check your advisor before buying any kind of stock. Thank you for your time watching this video. Have a nice day.